Hi everyone, this is Ben, and today is Sunday, October 12th. This is a follow-up video to the prior with my outlook on markets and macro data, and I want to walk through some of the things that I'll look at intraday and during the week to see what kind of follow-through we're getting from participants in the market after Friday's drawdown. And depending on how long it goes, I might do a review of some individual opportunities along with it, or I might decide to do that in a separate if I feel like it's too much for one video. But if you're new to my content, again, you can follow me on Substack, where I publish at least every couple of weeks, and I also put posts out regularly on X. With just individual things that I see that are interesting, or opportunities that I may be pursuing. So thanks for joining, and also in my publication, in the Substack that I just published for the Outlook, I've got a survey in there for days and times that would be good for a live call for us to do a chart review. So if that's something that you're interested in, please check it out and let me know what when would be best for you, and what topics you're most interested in. So let's take a look at just one more time to reiterate the dates of interest. This is the Astro Calendar, or the astrological tools configured to the eclipses in September, and the dates of interest are October 16th, October 22nd, and then we've got into the early part of November. So we want to see what is trend going to remain on an upward angle in the ScanFin, or is it going to start to wander down into the lower levels of support? And this is where we may get an ABC corrective bounce. Could be a scenario if timing continues to respect the vertical lines in the square of 9 and price levels on the horizontals. So that's what we'll look for. But if it's recovering, then we should start to see less resistance in the overhead angles, and more support on the ascending angles than the descending. And then on Bitcoin, similar thing, looking for more of a bullish finish to Venus interval 2, which concludes on the 29th of October. So it's important for us to see this, remain above about 115,000 with an ascending angle. So, starting with the S&P, this is the daily chart of the S&P. We've got a moving average band. This is a 34-period exponential moving average of the high and the low. And so that's still angled upwards. Price came all the way down, and you've got a candle that closed at the moving average, the 34-period exponential moving average of price low for prior days. And so if that holds as support, that would tell us that we've got a moving average that we've dipped into, but it rebounds from. That would be a very bullish scenario, and probably the most optimistic. Now, what I've got here are a Fibonacci extension, or Fibonacci retrace, and I've got a harmonic calculations of price levels. So the harmonic, what I'm doing is anchoring to a closing low, and then I'm using the difference between the closing low and the prior low to calculate a harmonic range. I do that separately in Excel, where it uses some angles to determine the best one, and then that gives us a range of price movement going forward, and it extends all the way up to this one extends all the way up to 9,707. Doesn't mean that we get there, but what I tend to see is price gets up to the 2.5 or the 3.75, which are very similar to some of the Fibonacci numbers, but it's where a 2.36 is important, and a 3.82, right? But it gets into this range, and that tends to be a consolidating territory where we get a reversal and then a retrace. It doesn't mean that we're always going to get up to that level, but that tends to be what I see when we get into that range. So closing price bumped into an overhead angle or harmonic and reversed, and that's normal behavior. It's what's less common is for price to just sail right through it and keep going. We normally see price continue to visit it, and it didn't even do that with candle wicks. Now, when it comes to anchoring the Fibonacci retraces, I do this from RSI crossovers, and so this one anchors at 5,786, which was the low on. Actually, it doesn't. It anchors the wrong one. It should be right there. So that's where I intend for it to be anchored. Is let me just move this up again. So I anchor them at the RSI crossovers, and then those tend to be our areas of support and resistance. So it's come all the way down to the 236. That's generally a pretty good first area of support in an uptrend. However, the 382 is where we would see buying opportunity, where I would like to see a buying opportunity in the context of an uptrend, and then your deeper areas of value tend to be at the 618. So we've got a lot going on this chart, but where we have some key levels of support at these Fibonacci ratios, and then we've got an alignment of the 618 with the next lower harmonic, and that's being approached by the anchored volume weighted average from the April low. And these anchored weighted averages can become strong areas of interest for the market. So this is the average buyer of the broad market index from this April low is in profit and deeply in profit. And once price crosses through one of these, now this population of buyers becomes potential sellers. And you've got risk of them joining the bears and trying to protect profit. So once price crosses below this line, everybody from this point forward is now at a loss instead of at a profit, and that's where selling starts to accelerate. So I like to anchor the green AVWAPs to price lows, and I also like to anchor them to gaps. And so we've got this gap up from May 9th, and that became kind of a springboard for price. We get a little fake out, we get a fake out, shake out, and breakout, and then it just pulls away and runs away from that gap up. And so that gap is approaching the 50% retrace. We've got blue AVWAP. I like to anchor blue to unique events. This happens to be the start of a Saturn retrograde, and that's a level of interest that price might revisit. And we saw it, break above, break below. So you've got fake out, shake out, breakout, and we get a couple of retests. So we're going to look to see if that holds a support. It's starting to approach this 236, and so if price dips below that, we could get into like a like an ABC type of retrace where we get into like a scenario like this, right? And you've got your so this is not a prediction. I'm just anticipating a possible path and scenario. And we've got an air gap in our volume profile, and it's a pretty big range. So it aligns to the 382, and then it comes down, and the point of interest is where the volume is most dense on your visible range volume profile, and that aligns perfectly with the 786. Now, the 786 is the lowest level of support on a Fibonacci retrace that I'm comfortable with, and the lowest level of resistance that I target, the highest level of resistance that I target in my initial profit taking. So what I find is that when we cross the 786, there's a higher potential for us to see a test of the 1272 in both upward movements and downward movements. So if this was like a bullish chart and it was coming up to a resistance at the 786, sometimes I sell into that, and then if it breaks out of it and retests, I buy. And so if we see price break through a 786, then there's a higher likelihood of a move down to the 1272. Is how I've had personal success using them. Other people use them differently. So those are some of the key levels, that I'm focused on for the S&P. But generally, as long as we're above this 382, that is still very bullish and very much an uptrend. So that's good news for us. Now, if we take a look at, I'll move this one out, and we'll take a look at Bitcoin. So people will be concerned with this move down in Bitcoin. We've got some things to be concerned with on Bitcoin, or that we've got declining state of this turns all my drawings back on, but we've got a declining state of momentum, and as a trend, the longer that a trend goes, usually momentum weakens over time. And it doesn't mean that it's called a momentum divergence, right? You're starting to get lower momentum into higher price, and then you get a reversal. So we're seeing a little bit of that. But what I want to start with here is this 325-day moving average. I want to stay in a Bitcoin uptrend for as long as possible. I do very well with this asset, and I don't like being shaken out of it. And so as long as it's above a 325-day moving average, I'm still participating in an uptrend. And this moving average is still ascending. And so that's a pretty strong angle. So I'm still, based on very long-term trend, bullish on Bitcoin. And now I'll turn the drawing tools back on as TradingView struggles to calculate anything lately. So we'll turn the drawing tools on and take a look at some of the key levels. So I'm using the AVWAP approach, and back in January 9th, 2023, we've got a inverted hammer, and then price exits its 2022 to 2023 consolidation. It exits that consolidation and begins its uptrend. And now we're using the harmonic approach again, and we can see that Bitcoin has respected these harmonic levels very well, right? And you're getting resistance and support and crossing 2 to 3 levels of harmonics each time. And now I'm anchoring an AVWAP to the start of that recovery, and then a handoff to the departure from the prior, right? And I'll do this multiple times. Like I would have done one, right here, and then you can see that so it's not a perfect process, because we anchor here and it's violated, right? And so that one's no longer important to me. Price broke through it, and sellers did not hold it as support in that instance, and we fell back down to a prior. So I'm now anchoring to our departure from the second AVWAP, where we never revisited again. And you can see where this one, once we've departed it from the last time, was April of this year, in the April drawdown, and then that has held support 3 prior times. So I generally like to buy whenever we have a retest of these AVWAPs, even if I've bought one that fails. Like, this is just part of my process to buy when we get those retests. Now we wicked right through it. So I bought on Friday on that drawdown at the AVWAP, and now we're back above this AVWAP. So this is actually a pretty bullish look for us. What I don't like is the anchored VWAP from the August high, and we broke through that on the last move up to 124, and now we're back below it, and price has kind of run into resistance at it on this Sunday night. This AVWAP from the prior handoff is now no longer valid, as price fell through it so strongly, and we would need to depart from this AVWAP again for me to anchor a new handoff. But so what we're looking for is this level, 110. We don't want to see this 110 level AVWAP violated, and then a full candle close below it, that's then breaking below the 106 to 108 harmonic tells me that we're probably going to start to drift lower, and maybe even come back below that 325 moving average, and that's where I would start to flip bearish on Bitcoin in the near term. Still very bullish on it as a long-term asset, but that's what I'm looking at. Now, let's look at a technique for intraday. So when we look at, we're going to look at SPY, the S&P ETF. So the reason that I want to look at this ETF is because it will get we'll get aftermarket price action, and when we're looking at the S&P and we look at an intraday, you don't have aftermarket activity on this index like you do on the SPY. So that's why I like to look at SPY. It's also a trader's instrument, so you get some institutional volume on here. So there's a couple of methods that I've got. There's the AVWAP method that I'm a big fan of. Let's go to a 5-minute chart. And the blue is a 2-day AVWAP. The purple is a 1-day AVWAP. Now, when it comes to volume-based indicators, you're getting institutions that are more smaller shops that can do things manually. You've got retail volume in here, but real high volume sophistication moves on a time-weighted average price, and this is the TWAP is a house indicator for TradingView. Let's go to about this script, and so you can get this house indicator right out of the indicators that are available on TradingView. For the multi-VWAP, I'm using a community script, and if you're interested in this one, where'd it go? Oh, this one. Oh, I'm sorry. This is one that I made based on somebody else's. So there's one in the community scripts. I made my own to based on his, to take some of the options out and speed it up a little bit, because TradingView's service has gotten so slow. But so you can find the same performing indicator with more options to it. Like it's got labeling. You can put in a custom AVWAP. It's just some things that I don't necessarily use, but so you can find those right in the community scripts. And this is an excellent indicator. I follow him on TradingView as well. He's done let's see. Yeah, he's done a number of great scripts on here. There's like a composite trend script that he recently shared. So there's a lot of good stuff that you can get from his published scripts as well. But that's where you can find the multi-VWAP. So let me change the color of the TWAP so that we can tell the difference between them. And I'm going to use teal. So when institutions, when we find institutional volume, it tends to follow the time-weighted average, and so when we pull away from that time-weighted average, these are our stronger dips, and we break above it, these are our stronger increases, and so you're seeing the participation of both very large sophisticated institutions and a combination of smaller professionals and retail traders by using a combination of VWAP and TWAP. So on Monday, on Friday, we saw price pull most strongly away from the time-weighted average, and it gave up that time-weighted average, almost immediately, right? So that told us this was a strong institutional sell-off. If it's going to recover, let's take a look back at volatile period with a recovery. So let's look at. We'll look at September 24th to the 29th and some of that price behavior. And let's look at the 30-minute. So get back into the 24th. You've got price coming up and testing, like wicking up to, the wicks are testing your 2-day VWAP, but your 1 day, we're using a 30 minutes, so the 1 day is like very close, but it isn't until we start breaking above, you're still getting resistance into the TWAP on the 26th, and it isn't until we reclaim it as support on the 30th that price starts to go on this nice October run, even though we're volleying in between the volume weighted average. So again, what I'm going to be looking for is reclaiming this TWAP. Will tell us that institutions are back in and buying. And for maybe some simpler tools that are that folks are more familiar with already, I'm going to turn off the drawing tools again. If we're in a recovered uptrend, then we'll see things like let's get this a 21-day moving average, right? 21-day exponential moving average. Right now, this moving average, and let's turn on a 5. And just a 5 simple. So if we're in a reclaimed uptrend, then we'll have a positively sloped 5-day moving average, and we'll have a positively sloped 21 EMA that price has reclaimed and treated as support, right? And so if we navigated this drawdown back in April, both are negatively sloped. Price is rejecting off of them, and that tells us that this is not safe for new buying, right? Then we get a rising 5-day moving average, fake out above the 21, and this is in an ABC correction A, you get into the B. This is our bounce that we sold into back in April, if you were following me then, and then we get our final drawdown, and now when both are positively sloped, now we've recovered our uptrend. So if you were just using these two moving averages, you were rejoining the trend back in April 24, and you can see that price has only violated this a 21-day EMA a couple of times, while it remained positively sloped. So we want to see more than 1 day against, but these are just two very simple moving averages that everybody has access to that can help us navigate it. Now we've got candle patterns that we can pay attention to, and one of the features in TradingView is the volume candle, and so we've got a very high. This isn't an extremely high selling day, right? So you've got much higher volume in your selling that told us that this trend was exhausting down here in high volume in its recovery. So this is relatively high selling volume, but not the highest that we've seen in recent months. It is a strong candle against, and it has no lower wick. So price went into a decline and closed all the way at its low. That's fairly bullish. This is one that's got no. It's a selling candle that's got no wick above it or below it. This is shaved, right? So strong candles against the trend signal a change in sentiment, and what we want to see when we have a strong candle against is a strong candle for trend. And so in this case, back in April we had a strong candle against trend. In December, that was a warning. We never got a positive candle in favor of trend throughout this consolidating upward drift, and then we get a kind of a spinning top reversal, a falling window sequence right here, little fake out, right? So you've got these this all started with a strong candle against trend was a warning back in December, and so even though we saw this recovery, there was not a lot of activity in this upward drift, and so now we've got your strongest candle in favor of the bearish movement came near the bottom of the trend in April, and then we have this very strong candle against the bearish trend and for the bullish trend on April 9th. And that's a strong signal that you've had a change in sentiment from your downward movement to an upward recovery. So we fast forward to Friday, again, strong candle against. Now we want to see in the price action that follows, a state of recovery should have an equally or greater bullish candle in favor of the uptrend. And one last relatively simple technique that we can use, just a simple Bollinger Band. So this uses default settings. You've got a 20 period moving average, simple moving average, 2 period standard, or 2 standard deviations, and in this case, let's turn on the identify breakouts. We'll use closing price. It might be a little noisy. Let's use. We can do candle body. So this is one that I made, so it gives us the breakout signals. But when you use closing price, so your first break below a Bollinger Band tells you that the movement is strong, and that it could see follow through. So for this to recover, we need to get, looking back, and again, we're going back to December, and we've got our first violation of the Bollinger, the lower band was December 18th. It gets back above it, and you've got this like kind of weak movement along a declining 20 period moving average at the center of the band. It recovers the middle of the band, and we get an upper band breakout, but we quickly close it without a cross back below it. Excuse me. Before making we did make a new closing high up here, but losing these Bollinger Band, losing the basis line, which is the middle line, and then breaks below the Bollinger Band, tell us that we're at risk of additional downward momentum and downward selling. So we need to get back above the middle, and ideally a break above the upper band to be comfortable that we're in a very strong uptrend. So with that, I'm gonna turn this one off, and let's do a second follow-up where we look at our third video where we just take a look at some of the sectors with breakouts and some interesting signals, and we'll run through those. They might not take very long, but thanks for paying attention, and if you're able to do a live chart review at some point this week, please check out the Substack and let me know what days and times are best. Have a great night.